And earning per share, and this is one thing that you need to look at. We are talking about like what, 24 or so cents? Am I right? 24 cents. And then PE. Okay, we worked out something for you to look at. And where are we now? We are now at around 5.2, 5.2 PE. It's for the investors community to say or to think about. I won't say much, but I truly think that we are undervalued. I mentioned it several times. You know, being a major player in Africa with the you know, cross borders you know, activities with such a price to earnings of 5.2. I think, you know, we could have, investors should take note of it and think about it, whether there is more room for higher market cap here. The exchange rate, nothing much to say. The exchange rate, again, the average. But I want to take you through our main banks we are dealing with, mainly BNP, Standard Bank of London, which is the mother company of or mother bank of Stanbic in Kenya, KCB, UBA, and others. We have total short-term trade finance lines of about 360, maybe even 400 million US dollars. We have no medium-term or long-term loans. We are now looking at maybe borrowing some 17 million US dollars for small size M&A projects, which are in the pipeline and we are working on. All our M&A, mergers and acquisitions, have been financed from internally generated funds. I think it is an indication of the company's strength. We have the commercial paper, and yesterday it's been approved by the CMA, and I want you to note, and Pat probably will refer to it, it's about 20 million US dollars, 1.5 billion Kenyan shillings. Again, it's unsecured. I don't know how many companies can get such approval with unsecured, but I think it is a proof of, you know, the trust in Kenol Kobil by the authorities here and the investor community. I want you to look at something interesting, and I know Pat will do it more into details and show you some charts, but let's look at the contribution to profit before tax per segments, okay? So resale contributes about 14%. Commercial contributes about 7%. Remind you, in our business segmentations, we segregate the fuel oil from the commercial sector, and we have it as a business line on its own, because we are probably the biggest player in the region in fuel oil. We are probably among the very few, if not the only one, importing fuel oil, have been importing fuel oil for the last many years. So that's why we segregated the fuel oil business line. Aviation contributes about 17%, export about 14%, trading desk about 11% to profit before tax, gas, LPG, this is across the group, 8%, non-fuel 5%, and we wish to see it more, and it will be more. Lubricants 4%, fuel oil and bitumen. Bitumen comes under the fuel oil and specialties like petrochemicals and so on, about 20%. I think it is an indication of how integrated this company is in so many business lines and so many activities, and that's what actually secures you know, a strong performance and profitability, and you do not rely only on one business line or one aspect or one country. So the risk is really balanced in the best way, in our view. Okay, you know about the board dividend policy. It's been updated last year in 2010 to about 40 to 45 of net profit. And I think if you look at the first half interim dividend, it represents about 38%, slightly below the 40%. The reason is not because we couldn't pay the 40 or 45%, is because we still said, let's reserve some of these internally generated funds for further M&A projects, and we do have some future projects. So I think we are still, as management and as the board, adhering to the policy of paying dividend to our shareholders. I think there are not many religiously dividend payers in this market and other markets. We truly pay on regular basis, twice a year, except last year we didn't pay, and I think in 2000 and last year, by the way, it was because of the BP project that we were eyeing. And I think it was in 2007 when Kendall acquired Kobil, where we didn't pay the interim, but we paid a hefty and very nice dividend, which is based on about 40% of net profit. So this is the policy, and I want everyone to take note. And I think it's important for you as investors to take note that you invest in Kendall Kobil, on regular basis you will be paid dividend, besides the share appreciation that we all expect to be there. But, and listen, this company does not need to borrow money to pay dividend. And I know there are many companies, including oil companies, and if you go to West Africa, you find them, quite a number of them, borrowing money to pay dividend. We don't need it. Actually, we are very, if you look at the cash we generated in the first half of the year, Pat will tell you, if I'm not mistaken, is like 8 billion. 8 billion. So it's, very healthy, and we stick to our policy of dividend payment on a twice a year basis. Okay, going forward, what do we intend to do? Of course, we'll focus on the group vision. Most of this growth will be through organic and, of course, acquisition. And for that, we have two of the group managers here sitting, so you can talk to them and ask about our activities outside Kenya. We'll continue developing the African trading desk. And I always said I believe that we Africans can do it better than many of these, players coming from Europe and so on to market products here in Africa. The fact that we have the term contracts, we have the barrels to market, and we have the capacity, we have the track record, proves that we have a good reason to focus and develop it and do it maybe even better than them. And I'm talking about the big multinationals who are playing in this sector. And you know them, the names are there. The Glencores, the Vitols, the Adax, and all these players that are very strong. Don't misunderstand. We have a lot of respect to them. But we believe we can do it better in our own continent, in our own market. We'll continue improving efficiency. Productivity is one area that we are looking at. Look at what we did in the first half. With such a difficult environment, we still even brought the distribution cost down. Why? Because we are doing it differently. We are truly focusing on efficiency and higher productivity. And we'll focus on the profitable business, the ones which are more profitable than others, and invest more. And of course, the retail sector, needless to say, is an area, not necessarily in Kenya, by the way, because of the price control and so on, but across is a major business line for us. But LPG, fuel oil, non-fuel, export, lubricants, and so on. We'll continue to be cost effective, I mentioned it, and a quick decision-making company. I think this is one thing that made us successful. Here you have a group, a team that knows how to operate. It's a teamwork, and the beauty of this team is that it requires us to sit and decide and make decisions quickly and without much of bureaucracy and hurdles towards the decision. I think we have a strong and professional management team, and I'm proud to tell you as investors, and if you are shareholders in Kendall Kobil, you can really rally behind it and behind them and be proud of your management team. We'll continue investing, and you have seen recently we are investing a lot in storage. The group is developing or increasing the total group storage capacity, and that's what we'll explain to you why we are investing in Bujumbura. We invested recently in Kigali, in LPG storage, in other storage. We are actually the owners of the biggest terminal in Central Africa, in Kigali. Why we are investing now in Lusaka, a major terminal there. Why we went into an agreement on Beira, where we got a storage of about 23,000 or 22,000 cubic meters. We trying to increase, and including in Kenya, by the way, some time back we signed and we leased out another terminal in Mombasa. I won't go into details, and luckily we did it at the right time. And we just recently extended the agreement for another 1 year. So it's been working for us to build up inventories. We know very well in the petroleum business, one of the key factors for success or failure, don't misunderstand, is the storage capacity. And we are working on it to build as much as possible capacity and develop more supply channels into the hinterland. And if you look at it, what we are doing today, we have a supply channel. If you go from the north in Djibouti towards Ethiopia, we have Mombasa that takes you into Kenya and some of the countries. Not much today, unfortunately, but if you go down south, we have Dar es Salaam, which has become the main supply channel into all the hinterland countries like Rwanda, Burundi, Eastern Congo, and Zambia, and Lubumbashi, and so on. And most recently, the new channel which we are developing, and we have it already in place, and we started marketing from there, which is Beira, which is, as you know, in Mozambique. And that would be mainly to feed Zimbabwe, Malawi, Lubumbashi, and maybe other countries that will go in. Watch it. And of course, the non-fuel activities, the property development, real estate activities will do more, and we want to achieve maybe 20% contribution of non-fuel, and we believe it can be done. It will be done. We think in Africa it will develop not differently from what we have seen in other markets, mainly in the Western world. We'll focus on training and capacity building. It's an area which is not so easy, believe me, and we are, it has become a big group. We are talking about close to 600 direct employees, maybe another 7,000 indirectly. So we need to build that human resource capacity. We cannot rely only on Kenyan. We need to bring on board from other countries like Ethiopia, Rwanda, Uganda, and so on, and integrate them into the group. And that's what we are doing. Actually, today, it's based mainly on Kenyans who are running the subsidiaries outside. And really capitalize on what we believe, being African player in Africa for the African people. That's something which we intend to continue working on.